morning, good afternoon, good evening. We're having a little bit of technical difficulties here. We are very happy to have you joining our first tax talks of the year. And we will be discussing a number of the hottest topics we are discussing in the CTP and in our inclusive framework. So if we can go to the next slide, you'll see the topics that we will be covering. We are going to start off with an update on the two-pillar solution, and we will have Achim Proos and David Bradbury, our two newly minted deputy directors here at CTP, presenting the latest developments on the two-pillar solution. We'll then have Sandra Kneppen, who is our acting head of division for tax treaties and transfer pricing, talking about the latest developments on tax certainty. And we will then move to tax and development, one of the biggest areas in which we work, and we'll have Ben Dickinson, who's the head of the Global Relations and Tax and Development Division, along with Rusidan Kamalia, talking about the work on tax and development and the all-important work on tax inspectors without borders, which Rusidan leads. We'll then go to Pete Batio, who is our head of VAT, who will talk about the latest developments there. And then I will be talking about the newest initiative that we have launched, the Inclusive Framework on Carbon Mitigation Approaches. And then finally, we hope we'll have time for some questions. So if we now go to the next slide, I want to just give a few highlights on the latest developments in the two-pillar solution. Since the last tax talks that we have been very busy on the implementation aspects of the landmark agreement that was reached in October of 2021. We have made a lot of progress on both pillars. First, on pillar one, which Achim will discuss in detail shortly, the intense negotiations of the multilateral convention are well underway, and we are still aiming for finalizing the convention by the middle of the year for signature. This represents a fundamental reordering of the international tax system. This work is technically very challenging, I think, as you all know, for those of you who have contributed to the public consultations. The stakes are very high, and at the moment, the negotiations are very intense, but we really hope that we can finalize that work in time for the signing ceremony. On Amount B, which is also very important, we continue to make progress. We released the main design elements of Amount B for public consultation in December. And the inclusive framework is now focused on integrating the over 1,000 pages of input that we received into the ongoing technical work. Now on pillar two, we've made pillar two and the minimum tax a reality. We have many countries implementing around the world. We estimate that almost 90% of global multinationals with revenues above the threshold of 750 million euros will be subject to the minimum tax by 2025. So a major achievement. We have not only all 27 EU member states, but also Australia, Canada, Colombia, Indonesia, Japan, Korea, Malaysia, Mauritius, South Africa, Switzerland, most recently Thailand, also the UK and the United Arab Emirates, all taking steps to implement the minimum tax. We are also working very hard on finalizing the multilateral instrument on the subject to tax rule to help developing countries protect their tax base. As regards other developments, the OECD hosted inaugural meeting of the Inclusive Forum on Carbon Mitigation Approaches was held on 9 to 10 February. I'll talk about that a little bit later. It's inspired by the BEPS inclusive framework, but very different in a number of respects. And then finally, last week, G20 finance ministers and central bank governors met for the first time under the Indian presidency. I just returned from there yesterday, and I will talk a bit about that. So if we can move then to the next slide. you'll see the G20 chair's summary. It's quite long. I'm not going to read it all to you, but I think the important aspects here are that G20 ministers have once again reiterated their support for the inclusive frameworks work on the two-pillar solution. It was a very successful meeting. You will see that it was issued as a chair's summary rather than a communique, but the chair's summary highlights that all of the text was agreed except for the paragraphs relating to the war in Ukraine. And so that is why it was issued as a chair's summary. This very substantial paragraph highlights a number of things, urging us to finalize the work on the multilateral instrument for Pillar 1, welcoming the fact that the minimum tax is now a reality, that countries are implementing it, and that the key elements are there for countries to now enact the minimum tax into their legislation. It also refers to the importance of completing the subject to tax rule. It also asks for greater coordinated efforts to support capacity building and implementation in countries. And finally, it asks for the Global Forum on Transparency and Exchange of Information to provide an update on the Global Forum's roadmap on unleashing the potential of automatic exchange of information in developing countries. And it also calls for the conclusion of the implementation packages for the crypto asset reporting framework and also the amendments to the CRS. So now if we look at the next slide, you'll see because the main deliverables in the G20 chair's summary were included in both the main paragraph of the text of the summary, but also included some additional reports in the annex to the chair's summary. So we've listed here all of the deliverables. I won't repeat the ones I've already mentioned, but you will see at the end that we have 2 new reports, a report on the feasibility of exchange of information on a voluntary basis with respect to real estate transactions undertaken by residents of a jurisdiction in a foreign jurisdiction. So we will be preparing an exploratory report on that. The Global Forum on Transparency has been asked to provide a report to assist jurisdictions that are interested in sharing tax information for non-tax tax purposes, and to do this within the framework, obviously, of a tax treaty and respecting all of the confidentiality requirements. But this report will provide assistance to those countries that are able to undertake this work. I should also mention, which is the second bullet on this slide, the request in the chair's summary for us to update the G20 OECD report on the roadmap for developing countries and international taxation. This whole area of tax and development is a very big focus of the Indian presidency. And so now, with that brief summary, let me turn it over to Achim and David to take you through the latest developments in the two-pillar solution.
Well, thanks very much, Grace. And let's begin with a brief discussion of some of the findings of the economic impact assessment. And for those viewers who no doubt are very avid followers of our work, you would be aware that in January, we released the latest update of our results from the economic impact assessment work. And that is focused, of course, on the two pillars, the two-pillar solution. Now, that analysis has taken into account both more recently available data since our last update, but it's also importantly taken into account the latest design changes to the two pillars, and really makes this study, I think, one of the most relevant because it actually does take into account those design features. Now, our analysis is subject to all of the usual caveats. I won't go into those, but if you want to delve into those in more detail, there's much more information on the website. Now, in short, what we found in our latest update of the impact assessment work was that the revenue gains are estimated to be even higher than previously expected. And that's both for Pillar 1 and Pillar 2. For Pillar 1, we see that revenue gains have increased and they are rising over time. In fact, using 2021 data, we found that the revenue gains would be in the order of 13 to 36 billion US dollars. Now, if you take that as an average across the period 2017 to 2021, it's in the order of 12 to 25 billion US dollars per year. And that results from the fact that new taxing rights are being granted on an estimated 200 billion US dollars of profit under Amount A. That reallocation, that new allocation of taxing rights is what is generating that revenue increase. And what we find is that across low and middle income jurisdictions in particular, that they gain even more than high income jurisdictions as a share of existing corporate income tax revenues. So low, middle and high income jurisdictions on average, they gain from Pillar 1. Investment hubs, on the other hand, tend to lose. When we look at Pillar 2, we see an even more significant set of findings, and that is particularly from the revenue gains that we estimate, being in the order of 220 billion US dollars. That's using 2018 figures, and that amounts to around 9% of global corporate income tax. So what's at stake here is significant. It's real revenue, and at a time when these matters are of great importance to governments, the implementation of these reforms will be crucial. Just moving on to the next slide, one of the key findings that we have made in this work is that a number of the new design features of the two pillars actually has quite a significant impact in improving the gains that low-income jurisdictions have to receive from the two pillars. So if we think about Pillar 1, specific design changes negotiated through the inclusive framework that have delivered these benefits to low-income countries, the special nexus thresholds, revenue sourcing rules, the tail-end revenue provisions in particular, and the de minimis rules. These have all had an impact. And when we think about Pillar 2, the revised UTPR allocation key is an important factor. And of course, the role of the qualified domestic minimum top-up tax in giving source jurisdictions the ability to be able to collect revenues before the other globe rules take effect. Now, just to highlight this point, for example, if we take Pillar 1 alone and we take those 4 design features that I just referred to, if we think about them, they are responsible for the largest proportion of the new gains that low and middle income countries enjoy under this new impact assessment. And if we combine those 4 features alone, we see that they represent a doubling of the increased tax base that low and middle income countries enjoy as a result of Pillar 1, Amount A. So these are significant design changes that are delivering real benefits, in particular for low income countries. And as part of this work, we look forward to being able to provide a further update in the coming months that will be even more detailed in terms of the economic impact assessment of the two pillars. At this point, I'd now like to hand over to Akia.
Thank you, David, my fellow freshly minted Deputy Director. I will take you through the pillars, Pillar 1, Pillar 2, in 15 minutes. Before I do so, I do want to, and hopefully you thank me and join me in thanking the pillar of the pillars, the unstoppable Grace Paris Navarro, that can't be stopped by a mute button, that can't be stopped by a cold, can't be stopped by a flu, and can even speak without an internet connection. So she is a digital miracle, and I have greatly benefited from working with her for so long, and I think the same is true for all of those listening today. Now, with my remaining 14 minutes, then let me take you through Pillar 1 and Pillar 2, starting with Amount A. And again, I can build on what Grace has already said. We have now concluded the last public consultation on the last remaining building blocks. That means we have consulted on every piece. I think that was very important. It took us quite a while. It might have been painful for you, but I think it is very important as we develop the policies that we have full consultation on all of the individual building blocks. So thank you for all of your comments, and you've seen that in many instances, we've taken the comments, we've revised, we've taken the comment, we've revised, hopefully making it better in the process. In fact, the task force on the digital economy is meeting today to move forward. There's over 250 delegates that are meeting today and tomorrow and on Wednesday, many in the room, some of them still connected by digital means. Grateful also to the UK and India that are chairing today's meeting of moving this forward, no lunch breaks, no stop of trying to get this over the finishing line. As I mentioned, they're now operating on the basis of a consolidated text. As always, and as you can see, of course, as you get closer to the finishing line, there is still remaining issues that need to be worked through. It's always the last mile. It's arguably the most difficult. But as you can see also from Grace's report on last week's G20 meeting, this is remaining a focus where G20 finance ministers and others around the world are dedicated to bringing this over the finishing line and coming also on Amount A to a signature within the first half of this year. Then let me move to the next slide so I stay within my time. That is Amount B. Just as important here, so in some sense a misnomer. But where are we on Amount B? You all know what Amount B is about. It's the application of the arm's length principle to in-country baseline marketing and distribution activities. And we have all agreed to simplify and streamline that and have a particular focus on the needs of low capacity jurisdictions. That's just a read from the IF statement. And as you know, and I don't have the time, this is something that we have worked on for quite a while in Working Party 6 and other fora, in the Forum on Tax Administration. I think here is a clear win that we can produce for businesses and for tax administrations. I see Sandra here who can tell you more about it from the MAP function, but clearly this is one that we feel quite strongly about, so we do about the others. There's clearly something that can be achieved here that benefits all of those concerned. Now, you see the benefits here. It's simpler. It helps low capacity jurisdiction, but it potentially helps everyone with a simpler pricing methodology. The public consultation has concluded. I think, we have heard you. I think many of the commentators have come in and said the scope is too narrow. And so we're exploring whether the scope could be broader. We had one meeting already following the public consultation. We have another meeting later in the week where we bring your comments to the delegates, and the delegates have an open mind and try to get this to a landing plate, that this is the most fruitful that it can possibly be. So point heard, there's a question on scope. There was also an expression that there needs to be a link with A and B, and those in A need to be able to have their distribution return stabilized. That point we have heard. I think there's quite broad opposition to the notion of local comparables out exemption here. And I think when you dig into this, you do see the concern by a number of commentators, in particular around situations where the local comparables would not be comparables that are known to the taxpayer. And it's a particular challenge. And I think we also hear that on the documentation requirements, many of the commentators feel that we should rely on existing documentation that we already have in the local file and other documentation, and minimize additional documentation requirements. And then finally, sticking to my 14 minutes, I think the pricing methodology and the search criteria, I think there's sort of broad support on this direction. So we're taking all of those comments. We are not deciding, we are the Secretariat to the Working Party in the second round that meets later in the week, and then work through those issues to also then seek to stabilize the outcomes of Amount B around the same time and coexistent with the timeline that we've indicated for A. So that also takes us in the first half of 2023. And as you can see, we're meeting with our delegates practically around the clock to try to make that happen. And again, thanks very much for all of those that have contributed to this public consultation and all the work on tax certainty, in some sense of which this is a part and on which Sandra will be speaking a bit more. Let me then turn to Pillar 2 on the next slide here. We have a couple more slides. I think Grace has already given you all the countries, so I'm not going to take you through all of those countries. This is just an indication where we say IF members that are taking steps to implement. These could be different steps. There could be a public consultation document. There could be a statement by the government. There could be draft legislation. There could be adopted legislation. So I'm not going to take you through where everybody is and which part. Is it a qualifying domestic minimum top-up tax? Is it all of the pillar? But you see that the pillar is a reality. It is being built around the world. And so I think that's the first message to take away. And it does say include this changes almost on a daily basis. We have other countries, so this is not suggesting that others may not be doing it as well. So just take this as a bit of a flavor of roughly where you see activity around the world in this respect. And there may be a lot more the next time we use that slide. If we go to the next slide then, please, then there's a lot of text. So because we will be making these slides available, but in the time that I have here, you all know that we have published the model rules in December of 2021. We then followed this up with a commentary, and then we issued guidance. I pause here just briefly. We issued 2 sets of guidance, in fact, one in December, and then another one in February. I think in the December guidance, we focused mainly on the transition safe harbors, and we also put out consultation documents. I'll talk about those in a moment with respect to tax certainty, whether that's prevention or resolution, and also with respect to the global information returns or compliance package. And then in February, I think we issued guidance focused and things also that have contributed, focused on, I guess, the most imminent needs of MNEs and also issues that countries brought to us that are in the process of legislating, and we tried to take all of those together. It's a long list. I'm not going to be able to talk you through all of those points, but clearly this has benefited from the public consultation that we started really after the release of the commentary, the meeting in April last year, remember, and we have been engaging with many businesses and countries that are in the process of implementing throughout the summer, and then worked through many of those issues. And so you will recognize a number of those issues, those that are closer to Pillar 2, whether that is, for instance, questions around guilty coordination. So we have a system where we can now coexist. We've always said there needs to be a coexistence with the guilty system. And now we've put out rules that explain about how this coexistence can work. We have addressed questions that have been brought to us where we brought clarification on naming just the numbers 415 or 913 on the carryover basis. And we've also brought clarification, simple clarifications, for instance, around a government entity, sovereign wealth fund, but at the same time, it's just a clarification. So clearly any commercial business, state-owned airlines or any other business is in scope of the global rules, irrespective of who owns it. So these are some of the guidance that we have issued. Then we will issue further guidance if we need to. We will also consolidate the guidance into a commentary. So there is always a commentary available where we then try to incorporate it. That's certainly the next step. So you have an up-to-date commentary that brings you the latest in terms of the guidance. And as I said, if we need to, in order to keep it all together, we will certainly do this. Then looking forward, and that's the next 2 slides, give you a sense on the global information return, the public consultation that we will be holding on the 16th of March, as well as the broader topic of dispute prevention and resolution, a natural transition, and also subsequently to Sandra. So if we go to the next slide and have a quick look at the global information return, again, there will be a public consultation on the 16th of March. But just a couple of the things, the comments received, again, thanks a lot. I think the global information return was probably not terribly popular with the business community, but that's what we need. We need your honest reaction, and I am sure certainly we did get it. So I think there is support for a standardized information return and an exchange framework, which also links to the last bullet point of having a coordinated approach to filing and administration, the administrative framework, making it structured, simple, and standardized. I think there is a clear ask to limit the data points that are required, with also a distinction between what's the working paper, what are the data points that you need, and what needs to go in the return, and can this be separate data points from return? Very useful conversation. We look forward to that. There is a request to allow for jurisdictional reporting rather than necessarily constituent entity in particular circumstances, and we will explore that in the public consultation and then also with the working party. Simplification and safe harbors, just to mention the word like QDMTT safe harbors, these things to come, very important. Next steps on the return, of course, tune in March 16, and then we will be working on the revised global information return, taking all of this into account, much appreciated, with a balance of what is really needed for tax administrations and what is the compliance implication for businesses, and coming up hopefully with a good balance. That's certainly the intention here in the Secretariat, and then also the administrative framework around it, so that filing and the framework and the exchange is as simple and standardized as it can be. Then next, if we go beyond the return and look at the wider system of coordination that we have for the global rules on tax certainty and dispute prevention, and that's really a big block. We have systemic features, which you can see here. We have common model rules. We have a common commentary. We will do administrative guidance. That should keep the system together. We will then have a peer review starting this year where we look at countries' rules as they're in the process of being drafted. to make sure that we all know whether some country has a good income inclusion rule that then deactivates the UTPR. All of these systemic things we will be doing. We will publish the results on our website so the taxpayer and tax administration can rely and use them to simplify the operation of the system. And of course, as I've just mentioned, we have a common globe information return so that every tax administration starts with the same and not a different data point. We then explore in the Forum on Tax Administration looking forward whether then we could build on those and have a common framework on the compliance aspect. That's a bit into the future. We're exploring also March 16, whether there should be features of multilateral advanced certainty arrangement, what they could be, a question to explore. And then on the next slide, we move into resolution. If we look at resolution, what can resolution be? There may be cases where different interpretation of rules in different countries result to potentially inaccurate application when you take it together. That is clearly not intended. What can you do? We can rely perhaps on existing treaties, limited potential for a number of reasons, no time to go into this. And then there's two other routes that we're also exploring. One, development of multilateral convention, including importantly embedding features of tax certainty, or whether you can rely on reciprocal domestic provisions potentially supported by competent authority agreements, maybe based on the Multilateral Assistance Convention in tax matters. These are all the things if you look forward to March 16, so do tune in. If we then, in my remaining minutes, I think go to the next slide. The subject to tax rule, as Grace has mentioned, a very important provision that allows the retention, if you wish, of taxing rights if you entered into a treaty on the expectation that there would be a level of taxation on the other side, but there is not. And then this rule for those covered items of income taxed at less than 9 nominal rate that allows you then to apply a top-up tax, same concept as the globe rules. And we are working on the drafting. The drafting is quite advanced. There's also a commentary that explains how this will be done. There's also a process, importantly, of how this would be implemented. So it's implemented not on a company by company basis, but on a jurisdictional basis. So we're all clear upfront what are the treaties where this will be inserted and on what basis. And then there will be a multilateral instrument that seeks to implement, much like the MLI, the insertion of that provision in the treaties, importantly, where the conditions are met, which will be determined through the process that we are working on. In terms of the timeline, I guess it's the same timeline as the other measures. So timeline here also sort of towards the summer. So if you go back, sort of the multilateral convention, the amount B, the release of the tax return, as well as the tax certainty dimension and any administrative guidance that we're still working on also towards the summer, and then also the STTR following along the same timeline. And then I think the last slide in my remaining minute, if I may, putting the pillar 2 also into a broader context here briefly. The first one, of course, there is a tremendous need for technical assistance and capacity building. We are doing this. We're not the only ones doing this. We're working with other international organizations. You may have seen that, for instance, ATAF has a model QDMTT. There's also the platform for the collaboration on tax. So we're working with partners here to provide assistance. We in the Secretariat, the Working Party itself, and then also countries with other countries, as well as regional and international organizations. There is a technical assistance program, including through the Tax Inspector Without Borders program, which we will hear more of about in a minute. And then we also recognize that we need tools such as handbooks and toolkits for different purposes, tax administrations, policy people. So we're working also on this. The pillar is not always easy. So that's one thing. I think there is then, if you are in the broader context, the wider questions around how this sits with tax incentives and in particular developing countries. That is certainly an opportunity here that developing countries can find how you react to this pillar 2 and how you may wish to redesign certain tax incentives. There's a lot that I can say that the time doesn't permit it, but there's work that's being done here by the OECD, but not just by the OECD, also by the World Bank. And there's also an excellent report, I think, by the IMF that looks at this, but also looks at wider implications of developing countries, domestic resource mobilizations within the context of the pillar and also more broadly. So these are all important broader dimensions. And maybe last, not least, also to mention that we also did some work, for instance, in the report to the G7, the German G7 presidency, where we also explored the simplification potential that could result from the adoption and the implementation of Pillar 2, where, of course, we're working on simplifications inside the pillar, whether that is transition safe harbors, whether that's permanent simplification still to come, and we're working on those, of course. But then also whether, you do need, against the backdrop of a robust minimum tax, whether there's certain other measures, whether at OECD level, domestic level, other level, whether there are certain measures that one no longer needs against the backdrop of that robust minimum tax, certain anti-avoidance measures that may become duplicative and can be reduced, so that also all of this is also an agenda that ultimately helps and facilitates cross-border investment and growth. So that's, I think, also a very important dimension that we are looking at. I think that's it for now. I mentioned tax certainty quite a lot, and that cannot happen without Sandra Kneppen, and so I hand over to her now. Sandra, the floor is yours.
Thank you, Achim. And so if we go immediately to the first slide, thank you. So I'm going to do something different. Instead of starting with prevention, which would be logical, I'll start with resolution. And those that already looked at or watched Tax Certainty Day have seen these numbers, but I just wanted to show you how many cases we have. We are at about between 5,000 and 6,000 cases in end inventory, a lot of cases coming in. And even if this year there were like a little bit less transfer pricing cases that started, I'm not sure that it's a trend, but still there's many cases to come into the MAP pipeline. It takes some 32 months on average for a transfer pricing case to be resolved. So we could say MAP is working. We can still improve. New reviews have been started to make this happen, but it really stresses that we need dispute prevention, because dispute resolution by itself is not going to do the job. And so, we have the tools for dispute prevention. We have APAs, corporate compliance, ICAP, joint audits, tools that can be complementary, and you can choose, depending on your circumstance, which tool to use, or perhaps a combination of several tools. But we have everything we need to provide more tax certainty for you in the dispute prevention stage. Now, if we go to the next slide, today, I want to talk to you a little bit about two projects we had to improve and enhance tax certainty in the prevention side. And the first one is BAPAM. It's a manual on bilateral APAs meant to streamline the APA project. APAs do have a good reputation with respect to providing full legal tax certainty, and for many years. But they take a long time, and so we looked at how we could improve. We asked stakeholders, and so we came up with a handbook with 29 best practices aimed at taxpayers and tax administrations to make things work better. And then the second one, the MoMA, it's not a museum, but it's a manual on multilateral MAP and APA, where we do see that there is more and more need for multilateral solutions. And we use the experience of jurisdictions that already do deal with cases in a multilateral way, and we created a handbook that explains how this could be done. And so if we go to the next slide, for the BAPAM, you see there are some suggestions on timing, best practices mostly aimed as well to taxpayers as to tax administrations, to the competent authorities, because if you aim for an agreement to be signed within 30 months, of course, it's the tax administrations that need to do it, but the behavior of the taxpayer and the cooperation of the taxpayer is also key in getting there within those 30 months. Adequate resources for the competent authorities, but also for the taxpayers that need to have the necessary people in place when there are questions and when extra information needs to be provided, a project plan so that everybody knows by when what is needed, all participating in the necessary to finalize on time. And for the behavior, I think a very important one, engage with each other in a principled, fair, objective, and transparent manner. And then you will see there's some that are specifically aimed to taxpayers, others that are specifically aimed to competent authorities, like only request the information that is necessary and relevant so that nobody loses time over information that will not be needed anyway. And like for the taxpayer to file returns based on the position taken in the BAPA application, because I mean, you need to be consistent. If you think that's the best solution, that's what you should also do in practice. If we then go to the MoMA, the next slide, you will see that we touched legal basis. So is it possible to deal with cases in a multilateral way? Yes, it can. And the treaties do allow for this. There are some challenges, but we also provide possible solutions to these challenges in the manual. And then procedural rules, actions to be taken at each step of a multilateral map and APA. So how you will discuss, will you have like one multilateral discussion, or will you have several bilateral discussions simultaneously or all together? How you will be implementing things, a suggested time frame. And we know that multilaterally takes more time usually, but we have an aim to conclude within 36 months from filing, which is like a nice challenge, I would say. Of course, we also highlight interaction with domestic remedies and the role of the taxpayers, because also here, just like in a regular APA, the taxpayer can do his part to make sure that things go smoothly. And we provided some examples for typical situations where multilateral maps or APAs may be very helpful. Now, I would say we received, and thank you very much for the positive responses we got to both manuals. Go and have a look. And always happy to discuss further if we need to do a little bit more on the one or on the other. And with that, I'll give it to Ben now.
Thank you very much, Sandra. And a quick word about capacity building, mainly to complement what Achim has already said. Next slide, please. Thank you. So although the rule setting work on Pillar 1 in particular is obviously ongoing, what matters greatly is the ability of developing countries in particular to participate in the inclusive framework and in the rule setting work, given the complexity and pace of it all. So you can see we've invested a lot in the last year on major regional events, and you can see how many people participate there. We'll be doing another round with our partners in 6 regions, the timing of which depends on the detailed progress of the multilateral convention, but it will be before then. In addition, every time we encounter a point of complexity, like on tax certainty, for example, then we will break out into technical sessions for developing countries to resolve differences where we can. And we invest a great deal in advising developing countries about how to prepare for each and every negotiation, and you can see some of the details there. The next slide, please. When it comes to Pillar 2, as you've heard from Grace and Achim, it is a reality. And since the beginning of the year, we have been approached by many developing countries who see Pillar 2 as the opportunity to address the old problem of tax incentives in a new way. Because if there is income left on the table, the rules work in a way as such that somebody else will take the tax if you don't. So there is a great deal of emphasis on the qualified domestic minimum top-up tax, and you've heard from Achim that our partners in ATAF are leading the charge there. So 10 countries are forming a pilot group of developing countries where we're helping them in detail to look at the interface between tax incentives and Pillar 2. And just to make the point that this is not just a tax discussion, obviously this is also about involving investment and trade officials into the discussion. So it is an important and whole of government approach that we're taking. The next slide, please. I hope that some of you, or many of you, managed to catch our tax and development days earlier in February, where the idea was that we showcased all aspects of what we call our mainstreaming work of development. And this is really about doing 2 different things. This is about involving developing countries in all sorts of aspects of our work, like revenue statistics, where they join the coalition of countries gathering and presenting revenue statistics in the same way, or accessing and unlocking expertise that's held in the OECD in the interests of development. And we showcased all of the topics on the screen in front of you. And it was great to have so many people participating. And we hope to be able to mainstream development issues more and more as time goes on across every aspect of the work that the CTPA does. The next slide, please. And just finally, before I pass you over to Rusudan to give you exciting news of Tax Inspectors Without Borders, just to make the point that none of our work can happen on development without the sponsorship of those providing voluntary contributions, nor without the amazing partnerships that we're able to form with regional organizations, whether those tax or regional development banks and other international partners. So here's a shout out for our partners. So with that, let me hand over to Rusudan. Thank you.
Thank you, Ben. Good morning, good afternoon, good evening. I'm delighted to review about the TIWB initiative and its impact so far. So what is the TIWB? Tax Inspectors Without Borders is a joint initiative of the OECD and UNDP that embeds tax experts in developing countries' tax administrations to provide a practical hands-on assistance on a real audit cases and related international tax issues. So initiative underpins OECD, G20, BEPS, base erosion and profit shifting actions as part of a broad international effort to strengthen developing countries' ability to effectively tax multinational enterprises. So how it works in practice, we send the qualified expert to developing countries to work alongside the local auditors to transfer the knowledge and skills. So there is no substitution. It's mainly about transferring the knowledge and the skills on ground. So the TIWB is a demand-driven initiative, as you know, which means that the assistance request is always coming from the developing countries. Next slide, please. So today we span 56 jurisdictions with 56 current and 58 completed programs, including 21 South-South programs. Next slide, please. So as I mentioned, the objective of the initiative is to build the audit capacity within the tax administrations and help countries mobilize tax revenues. So as you see to date, we have mobilized over $2 billion USD through TIWB programs and tax assessed at almost 5 billion across Africa, Asia, Latin America, Caribbean, and Eastern Europe. So we mainly focus in Africa region, in sub-Saharan Africa. However, as you see, the trend is very positive and we deploy the programs across the world in all regions. Next slide, please. And we do the work together with our development partners, and we have mobilized these resources together with ATAP, World Bank Group, IGF, and other developing partners. So as to the assistance areas, as you know, the TIWB was established in Addis Ababa at the International Conference, and we started with a few pilots and in 2016. However, so the demand will definitely remain at the audit, and we see that the country is enormously benefiting. You saw the revenue collection. We see that the priority areas and demand is increasing in different sectors, in extractives, telecommunication, financial transactions. Another very important direction for TIWB is criminal tax investigations. It's a very complex area where we have to face this. To go through, the first is really to conduct the maturity model, the gap analysis to identify gap within the policy, legislation, and organizational gaps. Provide the recommendation and then start the real case work. I'm glad to announce that we have currently programs ongoing, and even more, we have introduced a very innovative tool in Honduras, which is a digital forensic lab, which is very effective to conduct the criminal tax investigations. And overall, the criminal tax investigation programs are crucial in fighting illicit financial flows and overall tax evasion. So another very important direction for the TIWB is effective use of automatic exchange of information. You know that the Global Forum is responsible for transparency agenda and implementation of the international standards. However, the TIWB steps in at a very later stage when the countries are reciprocal, and they have a confidentiality infrastructure in place. Again, here we're using the practical hands-on assistance mechanism, and the countries can really benefit when they're receiving the information. It's mainly about the CRS, treatment of the CRS data and usage of the CRS data, data analytics, risk assessment, where we're currently having the program with Malaysia with the support of the HMRC. Another very important direction for the TIWB, which we currently started actually last year, is the digitalization of tax administrations. And we're working very closely with the FTA. The scope is very limited here. So we're working with the high officials and the management and the government of the tax administrations to provide advice on the strategic high-level programs and provide the advice to revise or design the strategies for the digitalization of their tax administrations. Moving forward, we'll try to have more programs, and the plan is to have 5 up to 6 programs in this year. So you see that there is other areas: extractive industry taxation, taxation and environment. So I will stop on the pillar 1 and pillar 2, which is one of our new directions, and it will be very critical to provide assistance. You heard from the colleagues the progress. So the immediate next step for the TIWB will be to help countries to implement global minimum tax rules, assess their tax incentives, and also harmonize their tax legislations, to adopt their tax laws, primary and secondary laws, to ensure that they prevent their tax base and collect their fair share. So here, last and a very new direction for the TIWB again, as the auditing VAT on the digital trade. It's a huge potential for developing countries to mobilize resources. We will use the same modus operandi, operational procedures, confidentiality arrangements to roll out these programs and help countries audit the VAT on digital trade and tax the non-residents in source countries and mobilize the resources. I will maybe stop here and will encourage the countries which are not benefiting yet from the TIWB programs to apply and benefit from all other the thematic areas I just listed. And also potential experts. We just released it UNDP roster. You can apply if you have a relevant experience and become a TIWB expert, and together we can make a difference for developing countries. I will stop here and I will hand over to my dear colleague Pete. Pete, over to you. Thank you.
Many thanks, Rusudan, and good day, everyone. I will present a brief update on countries' implementation of the OECD standards on VAT and digital trade, and a short overview of our recent activities and our priorities for the future. Viewers may recall that these VAT standards are presented in a series of reports that cover specific components of digital trade. These include the collection of VAT from offshore online vendors, the VAT liability of e-commerce marketplaces, and the VAT treatment of the sharing and gig economy. These standards represent broad global consensus based on the OECD International VAT GST guidelines and the VAT section of the 2015 BEPS Action 1 report. Next slide, please. E-commerce is growing particularly strong in developing economies, for whom VAT is often the main revenue source. Now, in response to the rising number of requests for technical assistance, we launched an ambitious capacity building program. 3 detailed regional VAT digital toolkits have been delivered for respectively Latin America and the Caribbean, for Asia Pacific, and for Africa. These were produced in partnership with the World Bank Group and with regional organizations. The last edition for Africa was released 2 weeks ago together with ATEF. These toolkits serve as the basis for a range of technical assistance initiatives, as you see outlined on the left-hand side of this slide. Next slide, please. The OECD standards on VAT and digital trade have triggered and influenced a worldwide wave of reforms. Approximately 90 countries have implemented reform based on these standards, and another 30 are currently preparing or considering reform. As you see, the majority of these countries are, for the time being, high or middle income countries, Low-income countries are somewhat lagging, and they are increasingly becoming the focus of our technical assistance efforts. Next slide, please. So what comes next? Bespoke technical assistance on VAT and e-commerce to developing economies is a key priority. Meanwhile, we have launched work to assist countries in tackling fraud and non-compliance, focusing on VAT and digital trade. And this will include some work on the use of data from digital reporting for VAT purposes. In the policy space, we are looking at the VAT treatment of crypto assets, including non-fungible tokens, NFTs, the virtual economy, and new business models in the platform economy. So that was a very quick snapshot. That's it for now. Keep watching this space for more news, and I'm very happy to now hand over to Grace to update us on the IFCMA.
Thanks very much, Pete. And if we can go to the next slide, I'm very excited to be talking about this new initiative in the OECD that brings together 3 policy communities within the OECD: tax, environment, and the macroeconomists. But we'll also be bringing in other parts of the OECD to look at the whole issue of how we can help countries improve their efforts to reduce greenhouse gas emissions. We know that countries around the world have set targets for themselves, but we also know that many of the targets that have been set will not be enough to reach the goals without doing more in the policy space. So what the Inclusive Forum on Carbon Mitigation approaches is really designed to do is to help improve the overall global impact of all of these measures. And it's important to highlight, because these are tax talks, that we're not just talking about carbon pricing. We're also talking about non-pricing measures that are being used by countries around the world to try and reduce greenhouse gas emissions. So this is an innovative project in that it's not just about tax, but really looking about non-tax measures in addition to tax. And so how will we do this? Well, this initiative was inspired by the inclusive framework on BEPS in the sense that it is inclusive, bringing in countries from beyond the OECD to come together for dialogue. But what is different, very different, is that we will not be setting standards here. This really is about data, dialogue, and decarbonization, if you will. What we're looking to do is to gather data from countries and other information sources, bring this data together in a database so that countries know what are the pricing and non-pricing measures around the world, and then to take those measures and map them against the emissions that they are designed to reduce. And the whole point really is about dialogue and evidence-based mutual learning through bringing together all of the countries and trying to discuss these issues and see how we can improve the different measures that countries are taking. So as I said, it's not a standard setting body. We're not going to be doing peer reviews. We're not going to be ranking countries. We're really going to do this data gathering information and bringing countries together so that they all have a better understanding of what countries are doing. So now if we go to the next slide, I'll just go very quickly. We had this meeting, as I said earlier, on the 9th and 10th February, huge turnout from all over the world. That was very exciting to see, but a lot more to be done. So if we go to the next slide, you'll see that we had not only technical people coming to the meeting, but also very high level participants in this, trying to all come together and work on this fundamental issue that the whole world is facing. Now, if we go to the last slide on the IFCMA, this is the technical work, and this is really important. We have 2 modules that we will be carrying out. First, as I said, taking stock of all of the different measures around the world, pricing and non-pricing, bringing them all together, looking at what countries are doing, and then trying to map those measures against the emissions. And then in the second module, we will be developing and applying a consistent methodology to assess the effects of these carbon mitigation policies and policy packages on emission reductions in countries. There are a lot of different initiatives around the world dealing with trying to address climate change and reducing greenhouse gas emissions. This is just one initiative, and it will contribute to other initiatives and importantly support the key initiatives in this area. Obviously, the UN framework Convention on Climate Change. This will be important information that we hope will complement that initiative and other initiatives around the world. But let me stop here and let's turn now to some questions. So I don't know how much time we have for questions. We had a few questions that were submitted already. So I will start by answering the first question we received, which was just like other crimes, tax evasion and aggressive tax avoidance is largely global. Will the OECD stimulate more global public-private partnerships? We see that the J5 started a public-private partnership on tax crimes. So are there any plans to expand this? Well, the one thing I wanted to say here is that one of the things we have been doing through our tax and development work is the work on tax morale. And a big part of that has been bringing business together with tax administrations to talk about dealing with tax avoidance and trying to come to a common understanding. So I think that has been a major initiative, informal in the sense that we have had regional workshops on these issues, but I think still quite important because obviously we need business on board to try and to ensure that companies are paying tax responsibly in the countries where they should be paying and the right amount as well. And that is a big part of what the tax morale initiative is about. But let me now turn to some other questions. Sandra, we had a question on MAP, if you can provide an answer there.
Yeah, so MAP, as I said, we have started a new process for peer reviewing, and so we started with the less experienced countries. We're going to go for the full peer review of the experienced countries as from next year. What can a taxpayer do if they have an issue? And I saw a question on implementation. If an agreement is not implemented, please go to the other competent authority, provide the input to the other competent authority that will provide input in the MAP forum, and so that we can do something with that, because agreements should be implemented.
Thanks, Sandra. Now, David, we had a question. You talked about the impact assessment and Amount A bringing more revenues to developing countries. And the question is about what about digital services taxes? So maybe you can talk a bit more about that.
Thanks very much, Grace. And I spent a lot of time talking about the revenue implications. But of course, when we think about Amount A of Pillar 1, it's much more than about revenue. It's been very much directed towards trying to help stabilise the international tax rules. And much of that has been required because of what we observed in the past, in particular with the proliferation of these digital services taxes and other types of measures such as those. And as we saw, that can spill over into trade and tax conflicts. And part of what we're all engaged in at the moment is trying to address those issues in a way that avoids that type of conflict. So it's not just about revenue, but the question goes specifically to the position of developing countries. And I think it's worth noting that even if you think about the revenue implications of Amount A versus digital services taxes, there's not a huge amount of evidence, but one of the leading reports that is out there is an African Union study that compares the revenue gains under Amount A with the revenue gains under a 2% digital services tax. And it does that across 55 African Union members. And it actually finds that Amount A will deliver almost twice as much revenue as that 2% digital services tax. So I guess even when we think about revenue, Amount A is still a pretty good bet when it comes to developing countries, a better bet than DSTs. It doesn't bring with it the risk of retaliation in terms of trade. And of course, the other point to make is that the centralised nature of the way in which Amount A will be administered will make it even a lot easier to implement than implementing a digital services tax. And of course, for developing countries, trying to impose a tax on companies that don't have a physical presence in their jurisdiction without that sort of centralized support may be very difficult. So we think all in all, there are very strong reasons why the Amount A agreement will deliver not only stability and certainty for the international tax system, but will deliver real revenue benefits, in particular for developing countries.
Thanks very much, David, Sandra, and all of our other speakers. We've run out of time as usual. And thank you to everyone who tuned in. We will have a replay available very shortly. So thanks very much. Bye-bye for now.